You're watching Venture Capital. I'm Katie Pilbeam. Bitcoin ATMs are coming soon. I speak to the brains behind the machines. Plus, we check in at the Frankfurt Motor Show and talk about demand and the rocky road ahead. Corporate news to come, as well as Mr. Sean Thomas, our in-house investor. He gives us a peek at his portfolio. But first, today is the 5-year anniversary of the biggest bankruptcy in history. Yay! When the ruthless, risk-taking, greedy banker party burst.
The Dow traders are standing there watching in amazement, and I don't blame them.
The worst day on Wall Street, because we're now down 43%.
What in the world is happening on Wall Street?
Yes, that was the catastrophic reaction to the destruction of the Lehman Brothers, the biggest financial blow since the Great Depression. But half a decade on, have the Lehman lessons been learned? Well, it seems the risk-taking habits are hard to shake. Just last year, Wall Street's biggest bank, JP Chase, lost over $6 billion on dodgy credit default swaps, which the bank tried to cover up. There's also been accusations of improper energy trading, reports that the bank hired children of Chinese officials to help with business, and several cases of misleading customers on identity theft products and mortgages as well. Altogether, these legal disputes will cost the bank just under $7 billion. A teeny tiny peanut for a bank with assets of $2.4 trillion. So now I'm joined by Patrick Young from DV Advisors. So Patrick, tell me, have the lessons been learnt?
Fundamentally, when it comes to Lehman's, I think we can safely say that nobody's learned any lessons from this escapade whatsoever. Government overall has simply missed the object. They've ended up actually in the back pockets of the banks, and fundamentally the banks themselves haven't realised the fact that they have to change. Indeed, if we want to look at this from a big picture in history standpoint, the thing that the collapse of Lehman's marks is the absolute peak of banker power. From now on, it's the power of networks disintermediating the banks that will challenge the financial monopoly. Government doesn't understand this, the bankers don't want to accept it, and have we learnt our lessons? Sadly not.
So is it the government's fault that the bankers have too much power?
Oh, fundamentally, I think banks have ended up in an incredibly toxic alliance with governments, and that's a fundamental problem for society. It's not that we don't need money, we need capitalism, but we don't and we should not have a situation where any industry is fundamentally subsidized by the government, and when it makes mistakes, the government rushes in to help it. The fundamental flaw of Lehman and what came after it was this sudden massive industry, whether in the USA or whether in the European Union, of bailing out the banks. Suicidal socialist politicians such as Gordon Brown in the United Kingdom collectivised the UK banking system in a manner that was not unadjacent to Stalin. The only difference was, at least under Comrade Stalin, he would have shot a few bankers who made these terrible mistakes in the first place. The fact is, nobody has brought the banking industry to heel, and the politicians now are completely pliant and compliant in allowing the banks to continue making the mistakes they've made for multiple generations and starving small entrepreneurs, small business, of the funds they need.
And if we go back 5 years to the Lehman situation, do you think it was handled appropriately? Because you're talking about governments, but the government didn't actually bail out Lehman's, did it?
Lehman marked a very, very interesting and beneficial moment insofar as it was allowed to fester on the vine. That was the one moment that the governments were acting successfully. The tragedy was, as the domino effect started to take place, governments panicked very quickly.
How much money are we talking about then? Because it is quite mind-boggling, really, how much money these governments have put into the banks. How much are we talking, and will they realistically ever get it back? Is that just not going to happen?
I think it's impossible to put a sum on the whole amount of money, but what we're talking about is multiples of the GDP of a major European nation has ultimately gone into the world banking system, if not more. And that's before we start looking at this funny money quirk of quantitative easing. The governments of the world have spent hundreds and hundreds of trillions of dollars bailing out a decaying, Dickensian, outmoded system called banking when the solutions to the future of finance is peer-to-peer, it's alternative currencies like Bitcoin, and it's not actually going to be a banking system as we had before 2008.
And Bitcoin, that leads us on to our next story here on Venture Capital. So thank you very much indeed, Patrick Young from DV Advisors. Always a pleasure.
You're welcome.
Now, a consequence of the financial crisis is the growing popularity of cyber currencies, particularly the Bitcoin, because they're free from central bank manipulation and government control. And now Bitcoin ATMs are to be installed in cities around Canada. Las Vegas-based RoboCoin is the company behind the Bitcoin machines. This move is being seen as a huge step to taking the virtual currency to mainstream status and breaking some of the misconceptions or even suspicions that surround the alternative coins. So to help me understand how the machines actually work, I'm now joined by the CEO of RoboCoin now, Jordan Kelly. So, Jordan, can you explain to me, just in simple terms, how do they work?
Absolutely. You know, the unfortunate thing about Bitcoin right now is the problem that customers face to acquire it. What we've spent the last year trying to solve, and we believe we've solved it very well, is by giving people the ability to instantaneously acquire Bitcoin through purchase with cash, and simultaneously they can sell Bitcoin for cash as well.
So as I understand it, you have to already have a Bitcoin account. And then you go along to the machine. No?
We try to really simplify this, right? From the buying side of things, you can go up to the machine without having a wallet, and it will generate a wallet for you on the fly. Or if you already have a wallet, it's as simple as scanning your mobile phone to send the Bitcoin that you purchased to your personal wallet. From the sell side, you actually do have to own Bitcoin in order to sell Bitcoin, obviously.
So what is the future of Bitcoin in your head then? How do you envisage Bitcoin to be in 10 years? Are we all going to be going to machines, getting out our Bitcoins, going shopping? How's it going to work?
That's a great question. And you know, from where we look at the market, right? We look at what we can do to truly impact and benefit the world, for that matter. And we try to tackle a few simple problems. The first is to make the acquisition and storage of Bitcoin super easy. And then the second is to make spending Bitcoin easier than spending money. Where I see it, I see so much value in Bitcoin just because it is a truly decentralized money, a truly decentralized programmable money that, you know, is authority agnostic, and effectively it's the people's currency. So who can't get behind that?
And now time for some corporate news then. We're going to get stuck in and talk about the relationship between Russia and Cyprus. Always been a close one. So much so that the Bank of Cyprus is getting a Moscow makeover. 6 Russians were elected to the 16-member board of directors. Abu Dhabi is planning to invest $5 billion in Russian infrastructure projects over the next 7 years. The move comes 3 months after another Abu Dhabi fund, Mubadala, pledged to invest $1 billion in the country alongside Russia's direct investment fund. And US stock exchange, the Dow Jones, is having a reshuffle. Alcoa, Bank of America and Hewlett-Packard are to be removed from the Dow and replaced by Goldman Sachs, Visa and Nike. The decision is based on struggling stock prices and the desire to diversify the mix of companies represented. All right, let's now check in with Mr. Sean Thomas, our in-house investor, and see what you've been up to this week. I was away last week in St. Petersburg. I'm back now. I want to know what you've been up to.
Well, first of all, when you left, the weather got really cold and rainy. You came back, and it has been a bit warmer. So thanks for coming back to Moscow for us. China is increasing its crude output, which negatively affects oil here in Russia, or at least that's what I would say. However, China is increasing their overall production, which means it's good for the stock markets. So oil probably going to remain volatile for a while, but I'm going to stay in and just kind of ride this one out, because sometimes you just got to gamble, right? I'm thinking I'm going to go for Raspatskaya, which is Russia's agriculture company. They're up 1%. It's not a lot, but I'm thinking, looking ahead, everybody needs to eat, right?
Oh, yeah.
Right. And in fact, looking at me, I love to eat. And since I love to eat, I love food, I can do my own part in raising those stakes, right?
Well, you said it, Sean. And I'm going to join you as well, because I like to eat too.
Indeed.
Perfect. But this week, engine lovers geared up for the Frankfurt Motor Show, where car companies battled it out to win the race for the most impressive concept car. And there was the Renault offering a vehicle with a map of Paris roof with disco-style interior as well. Citroën's the Sea Cactus with minimal modernisation and air pump panels designed to protect from common scuffs and bashes that could be simply wiped away. But aside from the fancy wheels and shiny bonnets, the issue of ongoing stalling demand was far less glamorous. Savage job cuts, halted production and increased manufacturing costs have plagued the car markets for 6 years now. We'll be able to see how the European market has particularly been affected. I mean, you can see just here, you've got it absolutely plummeting right there from 2010 to 2013. They're slashed in half the car sales. Now, Europe for the full year as well is expected to be below last year as well, so that trend will continue the rocky road, so to speak. As a result, Russia's car market has now overtaken Germany as the biggest car market in Europe. You can see that it's got a bigger car than this one there, so that demonstrates 26,000 cars. Now, I spoke to the CEO of Citroën at the Frankfurt Motor Show earlier in the week to ask about the road ahead.
We're still forecasting a European market which will be down for the whole year, this year, by about -5%. Having said that, I believe that we've probably hit the bottom, and we can see the green shoots of recovery and progress, at least for us. Russia is one of our priority zones of development. As you said, it's the largest market in Europe, if you include it in Europe. The market has been extremely difficult since the beginning of the year, extremely competitive, as you know, and rather in a recession situation, especially on the segments we're on, which is the medium car, saloon cars. Having said that, the most recent launch we had in Russia, which is a car which we call C4 sedan, is doing very well, and we believe that it gives us an opportunity of growth, at least in terms of market share.
All right, that's it for today's Venture Capital. I'll be back, same place, same time next week. I hope you can join me then.